76% of all the wealth in America is controlled by people over age 65. So that's nearly $100 trillion held by people that think Bitcoin is still kind of a hobby or things that people who live in the basement play with. So I think regulation could actually unlock a lot of that movement. I mean, just imagine 2% out of 100 trillion allocated to crypto. You could see a 5 to 10 to 15 times increase in total network value.
I am joined here on Crypto World with Tom Lee. He's the co-founder and head of research at Fundstrat. Tom, thank you so much for being here. Great to see you.
Yeah, great to see you.
And you guys have some really unique ways of valuing Bitcoin and a lot of other crypto assets. Walk us through some of the on-chain data you use and some of the things that you're looking at that really aren't available in traditional equities, and how you think Bitcoin is different from equities or bonds and any of the traditional assets that you might also cover at Fundstrat.
I mean, in essence, I think crypto is interesting because every transaction is traceable. Unless you're using like a mixer, but that's what makes Bitcoin interesting, that it's not a way to really disguise what you're doing. You could be anonymous, but your wallet's not anonymous. And that's what makes crypto interesting, because one, not only can you actually look at the number of existing holders of crypto, but you can track the history. But ultimately, the value of crypto is just going to grow by the number of holders, which means there's a network value. So it's important for community growth. One of the things that I think is challenging is that not every community member is as valuable. So I think there's going to be a lot of work done in the future about what is the proper value add by an incremental member.
What's holding it back? We're sort of in this $40,000 range. What needs to change in your mind to get Bitcoin to that $100,000 and eventually $200,000 level?
If you look at U.S. household net worth, which is 142 trillion, which is a staggering number. I mean, that's more than 5 times GDP. It's almost 6 times. As interest rates look like they're set to reverse, almost 30 years of declines, right? I think interest rates probably are either flat or rising. That means for the next 10 years, you're guaranteed to lose money owning bonds. And so we call that guaranteed TINA. That's $55 trillion, almost 60 trillion of the 142 trillion. So the question we ask ourselves is, where is the 60 trillion going to go to earn yield? And the obvious thing is going to be it rotates into stocks like FANG. Maybe it goes into crypto because you can generate yield through yield farming or lending. But I think what is more likely is that a lot of speculative capital from equities flows into crypto. So I think it's really going to be tracing its roots to a rotation out of bonds is going to eventually flow into crypto.
Perfect. I want to end with the biggest potential downside and the biggest potential upside catalyst for you, and that $200,000 eventual target. What do you look to as the thing that could unravel that on the downside? And then I'll ask you about the best news you could possibly get. But we'll start with maybe the negative, end on a positive.
Yeah, I think the biggest downside for crypto will actually be a vulnerability exposed in Bitcoin, because it's the most important blockchain and the one with the most value stored on it. And there's really 2 things that could happen. One is if the cost of energy globally fell to 0, because if you don't have to spend money to protect a security network, then it means someone can launch a proof of basically a 51% attack. And of course, the second is that cryptographic hash becomes exposed, meaning someone finds a way to actually, whether it's quantum, to essentially defeat the proof of work concept itself. So I'd say those are the biggest downside risk. And in terms of upside risk, at the end of the day, if I had to say what's the simplest way for a big step function to happen in crypto, it's really getting existing generations of investors in the US, not new investors, to actually be willing to allocate to Bitcoin. And 76% of all the wealth in America is controlled by people over age 65. So that's nearly $100 trillion held by people that think Bitcoin is still kind of a hobby or things that people who live in the basement play with. So I think regulation could actually unlock a lot of that movement. I mean, just imagine, 2% out of 100 trillion allocated to crypto, you could see a 5 to 10, 15 times increase in total network value.
Cryptocurrencies staged a bit of a comeback late this morning. The market as a whole gained about 0.6% by noon Eastern. Bitcoin prices hovered right around $43,000 after rising by 0.8% since yesterday. Ether rose more than 2%, and it sat around $3,000. Meanwhile, XRP fell by nearly 1%. Now, for more context on all that's happening in the crypto market, we turn to our own Tanea McKeel.
Analysts are telling me Bitcoin is really range bound right now. Some are saying it found the lower end of that range in January and is now in the process of reversing higher. So the support level, at least one analyst has told me, is looking at about 37,300. However, they say Bitcoin is not really in store for a near-term test anytime soon. I also talked to someone else who said, keep an eye on the 50-day moving average. That's about the $41,900 mark. It says traders might be using that support level as a stop level, with resistance at about $45,400. That could even go up to $49,000, which would be the 200 moving day average.
Before we go, SoFi CEO Anthony Noto spoke to CNBC's Squawk Box about the crypto buzz at the Super Bowl. Here's what he had to say.
I mean, we're invested in cryptocurrency. We own Bitcoin, we own Ethereum, we own some of the more obscure different cryptocurrencies, but it's a very small part of what we own.
And with that, you are all caught up for today, but we'll be back again tomorrow with more, so we'll see you then.